What if your bank account could help improve your credit score? There's a version of your credit score called UltraFICO that allows lenders to look at your checking and savings behavior, not just your credit report. Today, I am breaking down what is UltraFICO, how it works, what Plaid has to do with it, and whether this is something that can actually help real people. My name is Starr Carter, and thank you for tuning in to the Starr Carter Personal Finance Show. If this is your first time joining me today, please consider being a subscriber. Make sure you guys like the video and leave me a comment below if you have heard of the UltraFICO score and what is your opinion on it. I do want to hear from you all, so let's get into today's content. So, UltraFICO is not a replacement for your traditional FICO score. It's actually an optional enhancement. So let's get that out the way. So it's not going to replace the FICO score. It's going to be in addition to the FICO score. So UltraFICO allows the consumer to opt in and share certain banking data to potentially improve their approval odds and chances, okay? So it looks at things like your average account balance. It looks at the length of time accounts have been open, the frequency of your deposits, whether you maintain a positive balance, responsible cash flow management, okay? So instead of just looking at how you borrowed money, it can also consider how you manage the money you already have. That's the key difference. And I always tell you guys that it's so important now that we keep our checking account balances in tip-top shape. I tell you all about forming a relationship with banks and credit unions, especially credit unions, because credit unions have always looked at other data than just your FICO score or just your Vantage score if they're using that. So they're going to look at more information. They want to see what your overall relationship is with them. So that's why I love credit unions so much, because they understand it. They get it. If you have direct deposit going into your checking account and you have exhibit that you have steady income coming into their financial institution, that can be a reason for them to give you a chance on a personal loan or a car loan. Okay, so those are some of the things that they look at. And so them implementing this as an optional thing for them to actually look at your credit, I really think is a good thing. Now, if you remember, if you're a regular viewer of my channel, I talked about this in a video sometime last fall when people were talking about the FICO being a monopoly over the industry and how it wasn't fair and da. And they were already talking about alternative data, using alternative data to come up with credit scores. So this is a part of that alternative data that we're talking about. So how does Plaid fit into all of this? Now, this is where they come in. FICO partnered with Plaid to securely access bank account data. So if a lender offers UltraFICO, you choose to opt in, you will securely log into your bank account through a Plaid connection. Plaid verifies your account information. That data can then be factored into the scoring decision. Now, it's very important. This is not automatic. You have to share your banking data. So this is not something that they're going to do on the back end. Now, it's one of those things, like when you fill out an application, you're already giving them permission to hard pull your credit. So I will be saying that, if they're going to really try to push this with some financial institutions, I can really see this being another section of that says, okay, you're opting in for us to pull your credit reports from the consumer reporting agencies, and also you are giving us permission to also look at your banking information. So I'm thinking that that's how it's going to work. But I do want to pull something up on the screen really quick. What I just pulled up was the official announcement. This was back in November 20 of 2025, where FICO actually put this out on their website about their partnership with Plaid. I'm not going to read all of this, but I will say that the part that really struck out to me, and if you do want to read this, I can always link this article in the description. But what stuck out to me is this part right here. This solution will be distributed through Plaid's consumer reporting agency, Plaid Check. Raise your hand in the comments if you knew that Plaid had its own consumer reporting agency. because I didn't. I didn't. Plaid does collect data from over 12,000 financial institutions. If you ever had to link a bank account for any reason, sometimes they will use Plaid. Plaid is used a lot of times, especially if you're linking a third-party app like a Venmo, stuff like that, where you're linking an external bank account so that you can transfer money between those accounts. They will use Plaid a lot of times for that, where you could just put in your username and your password to that bank that you have. So it happens all the time, but I did not know that they had their own consumer reporting agency. So let's pull that information up. Okay, so here we go. Plaid check. So over here, it says Plaid Check Consumer Service Center. Okay, Plaid Check is a consumer reporting agency that obtains data from financial accounts you share to create consumer reports that go beyond a traditional consumer report or credit score. The Plaid Check Consumer Report can be used to qualify you for credit, verify your income, or provide other services at your request. So it's telling you could use the menu options to view or manage your Plaid Check consumer file. So over here off to the side, let me see if I can get rid of that. So over here off to the side, it says request a copy of my consumer file. You can submit a dispute. You can manage a security freeze. You can manage a fraud alert, revoke access to my data, pre-screen, opt out, and other questions or concerns. So that's something that I did not have any idea. We already know that there's other third-party consumer reporting agencies outside of the big three credit bureaus. We know that, like LexisNexis. What's another example? Check Systems. So Check Systems is used a lot whenever you're opening up a bank account. So we know that they have already used other data to approve us for anything as much as a checking account. So now with Plaid Check, they are actually able to look at your income information. Okay. So sometimes when you apply for a loan, they'll ask you to link your bank account. And I've seen this before, link your bank account just to verify that you have direct deposit. Okay. And of course, they're going to ask you if that's okay. So this is not something totally new, but them using it for a credit score would be totally new. So why was the UltraFICO even designed? And UltraFICO has been around. When I did my research, I saw that there was videos and there was FICO content that went back 7 years. So this is not new, but it's new to FICO partnering with Plaid to do this, to get this done. But this is not a new concept. So if you put in UltraFICO into the YouTube browser, you're going to see videos that go as far back 7 years. Okay. So UltraFICO was primarily created to help people with thin credit files, people new to credit, consumers just below the approval cutoffs, people with strong saving habits, but limited borrowing history. So that's what UltraFICO is intended for, or was intended for. If someone has a 640 score, but consistently maintains a healthy checking balance of regular deposits, UltraFICO could potentially help strengthen their profile, because it's looking at more than just that score. Now, we know that the score is important, but what's within the credit profile is even more important. So if you have a thin credit profile because maybe you're young, so you're just starting out, or maybe you are rebuilding from some past mistakes and maybe some things has fallen off after 7 years and now you're trying to rebuild, you may have a thin credit profile. So this could be something that can potentially help you, because if you are responsible with your checking, with your savings, with your money markets, and any of those type of savings and checking type of vehicles, this could be a really good thing. I want you to know this right here, though. This is very important. Now, just because a scoring model exists doesn't mean that every lender is going to use it. So everybody is not going to adapt this, okay? UltraFICO is not universally adapted. Not all banks participate. It won't fix serious delinquency. So if you got things going on, this is not going to help it, okay? It won't erase collections. It won't override major credit issues. So if you got some things going on, this is not going to help you. So pretty much if you already have established credit, You may have had some bumps in the road with your established credit. If you got collections, if you got delinquencies, those type of things, this is not going to help you. But if you have a thin credit profile, if you are new to credit, if you have not had a lot of borrowing history that they can go off of, they can look at your checking account. They can look at your history of how you've managed your funds. And I've always said this, that the credit report never really actually reflects what you have in your bank account. It's really and truly just going off how good you have been borrowing other people's money and paying it back. Now, I'm going to give you my own example from my own life experience. When I was in over 20 something $1,000 worth of credit card debt about 7 years ago, and if you are not new to my channel, you know my story. I was robbing Peter to pay Paul, but I never missed a payment. I always paid just the minimum, but I never missed a payment. Now, granted, I was one major illness away, or one paycheck being short, one layoff or something like that, that all the house of cards could have crumbled. But thankfully, none of that happened. So if they had looked at my checking account data at that time, they would see, of course, that I had deposits coming in from my job. They would have saw that, but they would see how quickly it went back out to pay bills. They would have saw that I did not have any savings. They would have saw that I did not have an emergency fund. They would have saw that I did not have 6 months of my living expenses saved up. They would not have seen certificates, CDs. They would not have seen any of those type of savings vehicles at that particular time, because that wasn't a priority. I was just trying to make ends meet. And that's a lot of us. So, and I've also had overdraft my checking account several times, So there's no shame in that. And sometimes that happens. But if they're going to be using this kind of data to give you an enhancement to a credit score that you may or may not have, then you will really want those things to be in tip-top shape. So I would tell you right now that if you are in a situation where your checking account is constantly in the negative, we got to work on that. If you're not building any type of savings, I don't care if it's only $5, because that's where I started. I started at with $5 every pay period. That's where I started. So you have to start somewhere, putting that in the savings account. One thing I do like about Navy Federal is that they have that easy start certificate where you can start it with $50, and then you can have a little bit of money going into it every time you get paid. So you don't have to put up the full amount to make the certificate a thing. You can actually grow it. You could grow the certificate. So we got to understand now that we're in a more modern angle of how they're going to be looking at our financial data. We're entering an era where credit decisions are becoming more data driven. So we're talking about AI underwriting. You have heard of people talking about doing credit applications and that kind of thing at night, because it's not a real person there. It might be AI that's actually doing the underwriting. It might be AI that's actually looking at the credit profile or looking at the credit score, and they are giving you a hard approve or hard denial without anybody actually looking at it. So you've heard people talk about that. We're talking about cash flow underwriting here now. Now, this is not a foreign concept when you think about businesses. I got a lot of people that always talk about business. So businesses usually use their cash flow to secure loans. They might use their accounts receivables as collateral for a loan. And that's basically looking at their cash flow that comes in. If you have a PayPal business account, which I do, every time I turn around, there's periodically some type of email telling me that I have great approval odds of getting a PayPal business loan. And inside of that information that tells you what they're looking for how much money you have coming into your PayPal account. If you use PayPal like me for your point of sale types of transactions. So it's looking at that type of data. And also it's going to look at what your other cash flow means are. But it's really looking at how much money that you get, because they're going to want to charge your account for whatever amount you get on a regular basis. So, you're normally used to paying a loan maybe once a month, but with a lot of these cash flow loans, especially some of these ones that are not bank driven, they're going to want to pull your payment every week. They might look for a payment every Friday or something like that. So this is not a foreign concept for businesses. Okay. So credit scoring is expanding beyond traditional borrowing history. They have to, because I'm not going to say that the FICO score is dying, because traditional FICO is not going anywhere. That is the guardrails to me. In my personal opinion, that is the guardrail so that they cannot just go crazy on the interest. Because here's the thing, you know, that our FICO score is broken down into different tiers and categories of what our score looks like. So let me pull that up on the screen so you'll understand what I'm talking about. Okay, so now we're going to look at how is the FICO score distributed. So this is what I'm talking about, the guardrails. So if you have a credit score, when they're breaking it down, if you have a credit score of between 800 and 850, they consider that exceptional. If you have a credit score between 740 and 799, they consider that very good. If you have a credit score between 670 and 739, they look at that as good. If you have a credit score between 580 and 669, they look at that as fair. And if you have a credit score between 300 and 579, they consider that poor. So here we are. If they are not basing our lending on these type of distribution, then they can pretty much give you whatever interest rate they want, because these are the guardrails. Usually, if you have a credit score that's in the exceptional category, like we're looking at here, that means that you're going to get the best interest rate, right? You're going to get the best interest rate because you have the best credit. Anything like 740, 799, you're going to get the next to the best interest rate, right? 760, 739, same thing. You're going to get pretty fair interest rates. When you start creeping down here to 580 to 669, that's when it starts getting a little dicey. It starts getting a little dicey. You may pay a lot more money for somebody that's getting the exact same thing. So both of you could be getting a car. One of you that's got a 740 is going to get a better interest rate than somebody that has a 769. Okay. And poor, you know, pretty much you don't want to borrow any money, because those were the loan sharks live. Those were the loan sharks really live. 580 is pushing it too. 580 to 600, you're going to see a lot of loan sharks in there as well. So that's where the guardrails are. If they are going by these categories, then that gives them a room to say, okay, here's the interest rates based on this. But if they don't have the FICO score and they're only using alternative data, your checking account, your the flow of cash coming into your account, then they can really truly charge you anything, because that is what the FICO score it was all intended for, is to give them a basis of where you are before they actually look at your actual credit profile. So that's what this is all about. So even though I think that the using the checking data and savings data is a good idea, I also do not think it's a good idea for them to get away from using the credit score, because it would not benefit us as the consumer. It will only benefit the lender. Okay, it will only benefit the lender, because again, guys, I've always told you this: FICO is not free. The FICO score is not free, and you know that the 3 credit bureaus get the credit information, the credit history information from the lenders, and then that information from the credit profile feeds into the FICO score. But whenever a lender is pulling your credit, they have to pay FICO for that score. They have to pay whatever credit profile that they pull. So if they pull Experian, they got to pay Experian, and Experian is going to request your FICO score, and therefore there is another cost. So all this costs money. This costs money. So if the banks and the lenders, if they can get rid of the FICO score, I'm pretty sure they would, because like I said, it would take the guardrails off of their lending. Okay, makes sense when you think about it that way, right? All right, so let's get on to the end of this information. So, you know, UltraFICO might make sense if you're right below an approval threshold, you have strong banking habits, you're comfortable sharing your account data. But it's not necessary if you already qualify, if your credit issues are deeper than thin history. The foundation is still strong credit behavior. So we still want to have good credit behavior. So guys, let me know. I think UltraFICO is interesting, but it's not revolutionary. It's just an additional layer. If you had the option, Would you share your banking data to improve your approval chances? I want to know what you feel about this in the comments. What do you feel about these banks or lenders using or asking you, can they use alternative data like a Plaid check consumer reporting agency, right, to qualify you for a loan? Again, this could be a good thing for somebody with a small credit profile, a thin credit profile, what they mean, and or somebody new, because you don't have any borrowing history, but you may have been saving money since you were 16. You may have had your first checking account since you were, some checking accounts, you can get one as young as 13. Where I work at, you can get one as young as 13 with a parent, of course. But so those are the things. You could be saving your money, from all that time, the little odd jobs you might have did during the summer, blah, blah, blah. So that could be a good thing, especially for somebody that's starting out just fresh out of high school, but been saving their money, been very responsible going into college. This could be a really good thing for that type of person. So y'all let me know in the comments. I really, really do want to know what you guys think. Again, if you're not already a part of the Credit Ready program, it is $5 a month now. You can scan the QR code that is on the screen, or you can check the link in the description. I really do appreciate all the love. And again, guys, let me know what you think. I'm going to see you all in the next video.